Good afternoon, ladies and gentlemen. My name is Sam Suryakumar, and this is an Eyewitness News special report. Mobile One, the third largest telecom company in Singapore, has just announced that they will be forming a strategic partnership with 4i Capital, an LLC between Siddiqui Capital and Red Sea Investments. At the same time, 4i Capital will also be taking the largest individual shareholder percentage of M1. M1 management commented that the technical and strategic expertise of Siddiqui Capital, particularly their software company, has the potential to more than double M1's revenues in the next 5 years. We're lucky today to have with us an executive from Siddiqui Capital, Ms. Jenny Zhao.
We're a company that pursues technological innovation and leadership, and our goal now is to pursue 4G. Therefore, we no longer take a standalone approach, but rather build a complementary portfolio of companies that are synergistic. We already own a Singapore software company, and we sought a mobile operator to pilot our innovations. We chose Singapore because it is an advanced, concentrated market with sophisticated mobile users. We could also leverage our knowledge of Singapore based on our experience with our software company. Of the three major Singaporean telecoms, M1 was the best match for our profile. Singtel and StarHub both have more networks and resources, which allow them to be multiplayers, attract the business and consumer segments through the bundling of their services. But their larger size also means less customization and plan flexibility. M1 has fewer overall resources, but its core competencies lie in the technological innovation and customer service, offering the most flexible plans and practical incentives. We see potential in M1 because it listens to customer needs and has a dedicated following. Furthermore, M1 has the most to gain from the government's IN 2015 project. This network will support more customers and faster service at a lower cost than M1's current leases. M1 also recognizes the need to grow as a full-service operator. Its recent acquisition of Quala signals its commitment to penetrating the corporate fixed broadband business. We believe M1 is the best candidate to gain a first-mover advantage into 4G. 4G increases customer access to information, but it also creates an overload problem, which prevents customers to access information efficiently. By forming this M1 and 4i relationship, we are tapping into the most profitable part of the value chain because data plans is where the revenue growth and margins will come.
Well, we know how Siddiqui Capital is approaching this strategic partnership, but how is M1 dealing with these changes? Joining us now is Karen Court, CEO of M1. Karen, thanks for being with us.
We're extremely excited about working with 4i because of our shared vision. The new members of the management team must include a strategist, innovator, and integrator. Ideally, the strategist is the former director of strategic investments and has connections to telecom regulators. The innovator would have experience in developing a global telecom service and sees opportunities in obscure markets. The ideal integrator is the former director of acquisition in a telecom company and has experience in managing and implementing strategic change.
Sounds like an impressive gathering of intellectual talent. So what breakthrough technologies will the public have to see from M1 in the future?
Since the partnership, Siddiqui Capital now has a platform to launch a new payment infrastructure, Money. Customers can receive phone notifications when monthly bills are due and pay these bills via their mobile phone. When online shopping, M1 customers will have the option of paying through their M1 account. Their different purchases will then be consolidated on their M1 bill and payment can be made via their mobile phone. In physical retail stores, M1 customers can give the vendor a mobile phone code which will allow the customer to charge the purchase to their M1 bill. M1 will charge vendors 2% on transactions and customers will receive incentives and rewards.
That's quite interesting. So would a customer be able to create an account with M1, link it to their bank, in order to have automatic bill payment through their M1 account?
Exactly. In fact, 4i data mining software will help us deliver relevant data to customers and collect market data, allowing us to offer products and services that best serve them. Tracking customer behavior will tell us which ads and recommendations to provide. For example, with the Take 3 program, if the subscriber is not calling one line as frequently as another, M1 will suggest a line that is more frequently called. When our network has enough scale and value, we can then sell the market information to marketing agencies and even the government. With the IN 2015 plan, this information will be particularly important for the government in its Infocom development plans.
Wow, that sounds fantastic. Mobile customers from all over the world should have these services. And joining us once again is Ms. Zhao.
The strategic partnership was completed by November 2009. During the previous 2 months, Siddiqui Software House refined the software suite and negotiated with retailers about the payment infrastructure, Money. Now in wave 2, we're integrating the software with M1, which will be completed in June of 2010, followed by a beta trial. At the end of 2010, we plan a full market penetration. For the first 3 years until 2013, we'll be offering the software to M1 at no charge, as this is a joint effort to increase market penetration. From then onward, 4i will be licensing future versions of the software to M1 and operators in Japan, South Korea, and Taiwan. We select these countries due to the market's readiness to adapt 4G and mobile services.
So how do all these plans for expansion fit into M1's current plans?
Under Siddiqui's guidance, M1 will be strengthening its foothold in Singapore while gaining capital resources so that in 2013 and beyond, we'll be able to engage in joint ventures in countries like Indonesia, Malaysia, and the Philippines. at which time the mobile infrastructure will be more developed and ready for 4G compatible technologies.
Well, we know that driving any big deal is the money. For that, we turn to Ms. Shaolin Gong, Senior Analyst from Siddiqui Capital. Ms. Gong, what motivated Siddiqui financially to become such a large shareholder in M1?
We believed in M1's fundamental business model and saw that the market was undervaluing M1. Currently, its stock price of $1.71 has declined by 37% from the highest point in 2006. Its market share has also declined from 30% in 2005 to around 25% in 2008. M1 actually has better overall margins than competitors due to its operating efficiency, but that's overshadowed by its higher churn rate and static growth. We believe that by infusing fresh insight into the company and creating programs that reduce customer churn rate, the synergies from the partnership between M1 and 4i will enable the company to reclaim its 30% market share over the next 4 to 5 years, more than doubling the firm's revenues. The results of our DCF, which is driven by market share projections and based on consensus WACC and exit multiples, suggest an implied share price range of $3.15 to $4. This high intrinsic value indicates that now is the perfect timing to acquire a stake in M1 since market valuations are low due to global economic downturn.
Was acquiring such a large stake and proposing a partnership to M1 difficult to approach?
Though ideally we would acquire a majority stake, it's difficult with M1, who's never had a history of a majority shareholder. We investigated the top 3 investor profiles, and it indicated it was unlikely that they would sell enough to piece together 51% without buying out all of the currently publicly traded stock. Also, there would be the huge risk of an uncooperative board because they could see this as a hostile takeover attempt and vote down our proposal. Thus, we believe that through buying shares from current institutional investors in public exchange, we can feasibly attain a 35% stake that would still allow us to have significant influence over the strategic direction of the company. To show M1 our sincerity and offer current shareholders an incentive to divest, we proposed a purchase price of $2.05 per share, which is a 20% premium to the current share price and a 3.6 premium to the 52-week high. Thus, our total investment would be 642.7 million Singaporean dollars for a 35% stake. However, we believe that under 4i's guidance, M1 can raise its metrics to that of comparables, and a relatively conservative sensitivity shows that the best time for exit will be 2015, which will give us a return in the range of 18 to 21%. Now, these results depend on a successful integration process, so both sides acclimate to changes in management and direction. The first barrier we'll likely encounter is getting M1 to deviate from its short-term quarterly strategies to longer goals. But this can be mitigated by tying compensation to performance in the annual period and holding a periodic think tank sessions with employees at all levels. 4i will also be breaking long-term strategies into more immediate implementable actions. Now, another concern is the conflict between existing and new management. We're still going through a process of finalizing candidates, but we're confident that the experience the team brings to the table will convince M1's board. Other risks include the delay of 4G adaptation in Singapore and non-optimal results from our strategy. However, the IN 2015 plan indicates 4G will arrive by 2012, and our preparation until then in attracting 3G customers to our services will allow them to take them onwards into 4G. And in addition, a solid management team and supportive board will allow us to adapt strategy flexibly. Well, traditionally, Siddiqui has received a 1 to 3% management fee and the option to acquire a minority stake in the company. However, this provides a very low return on services, barely covering our operations, and we're partaking in risks. So, because of this larger project, we consider a carried interest structure in which RSI would provide all the capital for the investment, and we would receive 20% of RSI's profit post-exit for our services. This decreases our risk, but RSI might not be willing to hire us because we don't have enough commitment into our strategy to invest a stake. And also, they aren't obligated to use this manager. We propose an RSI Siddiqui Private Equity Fund Limited Partnership called 4i. Now, we would be the fund manager, receiving a 1 to 2% management fee, as well as a 15% carried interest. But we would invest a 30% stake into our equity fund, which is about 14% of M1's shares. RSI would provide the rest of the capital. This way, we would be showing our commitment in our vision, we would be guaranteed the management role, we would be increasing our potential upsides of M1, and we would also be practicing and gaining independence as an individual investment firm.
Ladies and gentlemen, you now have a good idea of what is going on in Singapore. You've seen the ambitious and creative strategy that 4i Capital plans to put in place to help move M1 to the top of the telecom market. With the M1 board on their side, 4i Capital is confident that they will be able to once again put M1 on the cutting edge, charging forward into the next frontier. For Eyewitness News, this is Sayan Suryakumar, and thanks for being with us.
Boss! Everybody wants to take care of their finances from their mobile phone. Everybody wants to make their purchases from their phone and view their purchase history.
We have the perfect idea. It's an instant banker!
That's a great idea!